On Friday, October 3rd, Oscar Health moved up by over 12%, and this is a trend that we are starting to see across the entire healthcare industry. Names like United Health Group also moved up by almost 2%. And what I think we are starting to see in the broader market is this realization of what healthcare is going to look like in 2026. And what you should know about the market is it always starts pricing things in around 6 to 8 months out from actually seeing those results. And what the market is starting to price in is a very good 2026 for these healthcare companies. And of course, the market is always looking at news and data and trying to figure out where these companies are headed over the next 6 to 8 months. And when they see news like what we saw today, it is overall seen as a positive thing for the healthcare industry. What came out today was a poll that said that 78% of Americans approve of Congress extending ACA subsidies. And obviously, with a lot of people supporting the extension of these subsidies, especially with it bridging across party lines, there's a lot higher likelihood that Congress is going to pass some sort of extension to allow for these subsidies to stay in place, which should ultimately lower premiums for a large number of people. The concern throughout this year has been that premiums would increase in 2026 significantly, causing a lot of people to drop their plans. And this concern has really been compounded throughout 2025 with the changes that we have seen in unemployment. From January 2024 till now, unemployment has gone from 3.7% all the way up to 4.3%. This dramatic increase in unemployment results in less people having health insurance through their companies. And what that means is less people really electing to have health insurance in general, which ultimately has an effect on these healthcare companies. So overall, an extension of the ACA subsidies will have a big effect across the healthcare industry, but it especially has a major effect on Oscar Health because a majority of their members fall into individual or small group plans. And overall, this has an even further compounding effect when it comes to Oscar, because in 2025 Q2, they reported revenue growth of about 29% year over year. This is in a very unstable healthcare industry. If in 2026 we see these subsidies extended and we see healthcare start to stabilize, that could mean major top line growth for Oscar Health. Before we move on from this slide, I want to highlight a few different numbers that we're going to use in some math here in a second. The first being medical loss ratio. In 2024, they had a 79% medical loss ratio. That has increased to 91.1%. Overall, in the health insurance industry, they try to target between an 80 and an 85. I'm going to actually use this 79% in our future calculations. One thing to also consider is SG&A expenses. Overall, they have dropped their expenses year over year. This is really just a benefit that could have a bigger impact in 2026. I'm not going to talk much about this, but this could improve their margins that we are going to use here in a second. And then the final number that I want to highlight is this $56.2 million of net income in 2024. We've obviously seen a major decrease in that number. They are now losing $228 million in Q2 of 2025. But again, a lot of that has to do with this medical loss ratio being so high this year. So here I've laid out those same numbers for 2024 and 2025. Basically just copied and pasted those numbers over. Obviously, 2025, they had a much higher medical loss ratio. I'm going to keep that stable over this time period. Basically, what I'm doing here is I'm assuming if they had came through with a 79% medical loss ratio in 2025, that would have resulted in around $72 million of net income in Q2 of 2025. However, again, that didn't play out because they saw this increase in their medical loss ratio. But if it had, and their shares outstanding stayed about constant, that would have resulted in EPS of about 26 cents for the quarter. And if we extrapolate that over a year, that would be $1.03 of EPS for the full year at a 20 PE ratio. That would put the stock at about $20.65. So that again is if things had played out different in 2025. Obviously, things did not play out that way for Q2. However, in Q2 of 2026, if we continue on this trend trend and they're able to grow revenue by only 25%, that would result in 3.5, almost $3.6 billion of top line revenue. And if we see a margin similar to what we saw in 2024 of about 2.53%, that would be net income of about $90.6 million for the quarter. Again, if we extrapolate that out, keeping the shares outstanding the same, that would be about 32 cents of EPS for the quarter. Moving that over the course of the year, that would be $1.29 of EPS for the full year. And again, at a PE ratio, which in my opinion would be low for this company, of 20, that would result in a stock price of almost $26 per share. But honestly, I think a 20 valuation for a company growing their top line by 25% is a little bit low. What should be more realistic is at least a forward P ratio of a 25. That could result in a stock price of $32.26 per share. But in my opinion, those are actually fairly conservative estimates. If you want to be ultra bullish, you could assume that Oscar could grow their top line by 35% in 2026. That would result in revenue for Q2 of around $3.8 to $3.9 billion and net income of almost $100 million for the quarter, resulting in EPS of 35 cents per share, yearly EPS of $1.39 per share. And at that point, if they're growing their top line by 35%, they're growing their bottom line by around 35%, they could easily command a 35 PE ratio, resulting in a stock price of almost $50 per share. And honestly, when you look at these numbers and compare this to analyst expectations over the next year, they feel way too bullish. Because for next year, the average EPS estimate that analysts are expecting for Oscar Health is minus 32 cents. To me, that is just crazy. They also are expecting Oscar to actually see a decrease in revenue. I think both of these numbers from analysts is absolutely insane. I don't think there's any way that a company that is growing their member count significantly, growing their top line by 30%, is going to see this dramatic of a fall off over the course of the next year. They also have an average price target of only $11 on this stock. This is one of those opportunities where the market just doesn't understand how to value the company. And what we could see over the next couple of years is a massive increase in Oscar's stock price as analysts start catching up to what is actually going on with this company. Another company that has been beaten down in a major way is United Health Group. Right now, the stock is trading for $360 per share. It was up about 2% today with that news as well. In my opinion, United Health Group by the end of 2026 is a $500 stock on the low end. It could be as much as $600 if we see a major turnaround in this healthcare industry. But this is still up significantly from the lows that we have seen back in August of this year when the stock hit around $240 per share. We've seen a nice increase from that point till now of over 50%. And a lot of investors are starting to finally wake up to the idea that this stock is going to have a huge rebound in 2026. We saw this last quarter with a lot of super investors buying into the stock, the most notable being Warren Buffett's Berkshire Hathaway. It's unclear whether Warren Buffett actually made this bet, but I do think that a lot of these companies that made major purchases last quarter likely will have increased their stake in United Health Group this quarter. And right now, United Health Group is expected to announce their third quarter 2025 earnings on October 28th. And analysts are expecting $2.87 of EPS. This would put them on track to hit their target of at least $16 of EPS for 2025. I personally think that this estimate is a little bit low. Obviously, I am bullish on the healthcare industry overall. I think that they should put up $3 to $3.50 on the low end. I'd love to see them put up somewhere closer to $4 of EPS. If they're able to come through with those types of numbers, they will clearly blow this $16 of EPS for the full fiscal year of 2025 out of the water. And analysts will really have to start looking at their projections for 2026 for this company, and we could see a massive move up in United Health Group's stock price. And much like Oscar Health, United Health Group is suffering from analysts providing very low expectations for 2025 and 2026. For 2025, they're only expecting $16.24 of EPS. And for 2026, the average EPS estimate is $18.09. In my opinion, both of these numbers are low, and we will see over the next couple of quarters, as well as over the next 12 to 18 months, a fully different story than what analysts are expecting play out. And thus, we will see United Health Group's stock price move up in a major way. Keep in mind that the valuation of these companies is based off analyst expectations for the next 12 months. So the forward PE ratio right now for United Health Group looks a little bit high, sitting at a 20. However, this is because expectations for EPS are so low over the next 12 months. If we see analysts being completely wrong and EPS comes in much higher, then this valuation is quite a bit lower than it actually appears. But keep in mind that I do own both of these companies. This is the U2 portfolio. Right now, it's up almost 43% year to date, and we're sitting at a total value for the portfolio of over $82,000. And throughout 2025, I have built a number of positions in the healthcare industry. The most notable being United Health Group. Right now, the market value on my position is $8,600, and we're up almost 25%. I also own Oscar Health, 225 shares right now. That's just under $5,000 for the value of that position, and we're up over 55%. And then I have also been building out a position in Novo Nordisk. Right now, I own 45 shares. It's about $2,600 for the value of that position, and we're up almost 10%. I do want to make you guys aware of a recent sell that I made in this portfolio, and that is Super Microcomputer. I cut my position in half. I owned around 240 shares. Now I have 120 shares. The reason for this has to do with the stock spiking up recently. It moved up about 10% in a single trading day. And what I told myself kind of moving into this quarter is if we see Super Microcomputer go above $50 per share, I'm going to start trimming my position. I think that over the last couple of quarters, what they have done throughout their earnings is they have under-delivered to analyst expectations and really investor expectations. And every time what we have seen is throughout the quarter, the stock has moved up, and then they announce their earnings and the stock immediately crashes back down. So Super Microcomputer, I'm just adjusting my position down a little bit. I could sell out of all of this by the end of the year if we see it continue to move up, but right now I'm kind of happy with where this position is sitting at. But of course, this is all my opinion. None of this is financial advice, but I'd love to hear your opinions down below. Do you own Oscar Health? Do you own United Health Group? And what are your price targets for 2026 for both of these companies? Thank you guys so much for watching. If you enjoyed the video, go down below and drop a like and subscribe for more videos like this one. And as always, have a wonderful rest of your day.